all, the impact of the HDFC merger news and the clarification on the date is not only having an impact on the market, which is now comfortably above 18,800, and the rest of the HDFC group companies like Limited as well as Life, but it's also having a ripple effect on the likes of LTI Mindtree. Surprised? Wondering why? Somit will tell you the reason. Somit.
Well, if you see, HDFC will stop trading on the indices from July 13th, and as per Nuvama, LTI Mindtree is the most likely stock that could get included as a replacement for HDFC in the Nifty 50 index. Now, this adjustment in the indices will take place immediately around the ex-date of HDFC, and the announcement of this from the NSE is expected to come in within a day or two once the exchanges receive an official announcement from HDFC regarding the record date for this merger to be effective. Now, as per Nuvama, if LTI Mindtree gets included in the Nifty 50 index, there could be an inflow of close to 150 to 160 million US dollars, and that is the major reason why we are seeing such kind of up move in the share prices of LTI Mindtree. Now, post the merger of L&T Infotech and Mindtree, LTI Mindtree has become the fifth largest IT company in India, and it overtook Tech Mahindra on the merger, and nearly 57% of the analysts tracking the company continue to have a buy rating on the stock, given the fact that they are expecting their FY24 revenues to be in the double digit range, though they are saying that the first quarter revenue could see some weakness, but for overall FY24 they continue to remain bullish, and they're expecting a double digit revenue growth for FY24, and they're also saying that they have an aspiration to get their margins back to around 17 to 18% level for FY24.
Yes, and given the fact that bulk of that cost on account of the integration and merger was already taken in Q4, there might be a bit that might come in Q1 as well. But nonetheless, that's something which the street is factoring in, and that's the reason you have LTI Mindtree high by around 3%. But Amisha Vora, the chairperson and chairperson from the Prabhudas Lilladher group, is joining us on the show to talk to us about the market fundamentals. Amisha, hi, thank you so much for making time and speaking with us. First up, your sense on the market. Do you think it's getting a bit toppish, or do you expect this rally to continue? Do you think the legs are there and the stars are aligned in terms of the earnings which are coming up to take the markets higher?
I think that the rally has been really sharp in last 1.5 month. The most deserving one also, frankly, post the fact that after the initial enthusiasm about China economy opening up, things are not just working out there. And one good destination with a major economy, fastest growing, is India. So FII flows have also changed. Having seen this, I feel that there are certain legs to market. So in the immediate short term, a little correction here and there or consolidation, not impossible. But I think that it will cross the whole-time high. And from a 12-month perspective, of course, we think that 20,000 and above is our target.
And above, as far as Nifty goes, that's what you're targeting on the Nifty. But you know, Amisha, the strange part for the market for the last 2-3 months was the fact that the large caps were underperforming. There was a lot of exuberance and, you know, quite a bit of enthusiasm in the broader market, but that wasn't getting replicated in the large cap names. Do you think this latest news flow coming in on the HDFC twins will spike those counters, and then the rally in large caps will follow?
No, I think that the phenomena was also because at one point market realized that as far as India is concerned, the rates are coming to a pause. And the only direction most likely it will take is, reduction in rates gradually over a period of time. Generally, at that inflection point is when we see mid-cap and small-cap start participating. And which is what we saw this time also. Apart from that, if you see sector by sector, the outlook has been increasing, be it railways with the orders, be it defense, be it hotels, be it, some of the auto sector stocks and auto ancillary, so to say. So I think that the participation continued to increase from sectors. And above all, I think one of the most important reason is that while Nifty was holding up, it was the wider spectrum of corporates who got totally butchered last year when the oil prices, gas prices, commodity prices, soft and hard, inched up so much that there was a complete margin squeeze. And as everything is nosedived now, we will see in this quarter, last and this quarter, huge improvement in margin. So that's how the whole rally is very broad-based this time.
That it sure is. Amisha, stay with us. Lots more to talk about. But coming up is IDFC Presents Leaders of Tomorrow World MSME Day. A special interview coming up with V. Vaidyanathan, the MD and CEO at IDFC First Bank, in conversation with Mihir Bhatt, Managing Editor, Times Network, and Business Head, Times Influence, on the World MSME Day, highlighting a unique initiative by IDFC First Bank, which is a booster for the current accounts market for MSMEs that has multiple benefits like the ones highlighted.
It's World MSME Day. Are you going to, are you looking at launching some new initiatives, maybe to focus on this category more specifically and otherwise to support businesses?
As you know, we like the segment a lot, and we're given close to 30.
I love your passion about this segment.
We've given 30 million loans. Our whole company in the past has been created through this segment. A bank today is financing that. Out of our 1,20,000 crores, probably 50% of that is this credit, right? And they're doing very well. So we have introduced a really special product whereby we tell the small entrepreneur, MSME, we put the category of MSME. It's a special offer for MSMEs only. In MSME, we are saying, you're an MSME, open current account with the bank. Up to 2 lakhs, we'll keep in current account. But supposing you have 20 lakhs, 18 lakhs will make an FD out of it.
Automatically.
Automatically. You don't have to call. It will happen automatically. You can sleep in peace. Now, that 18 lakhs will start earning you 7.25% rate of interest because we'll convert it over 1 year FD.
Oh.
So on 2 lakhs, you get 0. On 18 lakhs, you'll get 7.25. Now, supposing you issue a check for, say, 1 lakh rupees, we will pay the check out of your current account. We won't touch the FD.
So that reserved amount of 2 lakh will be used?
Will be used.
Yeah, okay.
Even if you cut out a check of 2 lakh rupees, we'll pay the current account. We'll not touch the FD. We'll not say you have to keep minimum current account.
And for this entire exclusive conversation on World MSME Day, tune in to the Leaders of Tomorrow at 3:30 p.m. and 10:30 p.m. tonight, only on ET Now. Let's move on and let's address what's happening within the HDFC group of stocks. HDFC Life, it just had a block deal as well a short while back. That stock has spiked up nearly about 5% on futures. HDFC is scaling up a new peak of almost about a 2% gain intraday. And HDFC Bank as well, higher in excess of 1.5% as we speak right now. Amisha, this all comes in the backdrop of the merger date getting announced. And, this is going to be a combined entity come next month. I just wanted to understand whether you think the big, or rather the major part of the overhang on the merger uncertainties is now behind us. And, the stock price clearly seems to be reflecting that.
See, from a fundamental perspective, we definitely feel that this is a very important merger. And particularly the ability to cross-sell is going to increase many-fold post this merger. And they are very well prepared because the formalities took almost a year. So in terms of their capital adequacy or their CRR, etc., they are very well prepared, SLR. But I think that the recent SEBI move that institutions can't hold more than 10%, and this combined entity, of course, will have a much larger weight, will take some more time for markets to adjust the overall holding. And once that is stabilized, I think that will be the time by when the merger synergies will also start reflecting in. So from a medium-term perspective, 2 to 3 years perspective, I think it will do exceedingly well. But for the short term, I think that one needs to see how mutual fund holdings are getting adjusted.
That cap coming in for mutual funds will definitely have a bit of an impact. As per some of the calculations, it could trigger the changes to the tune of 5,000 crore worth of holdings on the HDFC twins. But from the HDFC group, it's HDFC Life which is buzzing around today. We just flagged it off high by around 5%. And those cross-selling opportunity that Amisha also was talking about is something that we discussed with the management of HDFC Life just a couple of days ago, wherein Ms. Pidalkar was talking about how the cross counter share is likely to go up to 70% versus 55%. So listen in to that bite coming in.
Yes, there will always be pressures on margins, but we have to eke efficiencies out of our existing business and our back book to be able to fund some of that. If the tax change had not happened, the margins would have gone up. No question about it. Given that the tax change has happened and it is taking a little bit more time, while HDFC Life has fared in the first 2 months 2x or 3x depending on versus private sector or overall industry. We have fared on every metric, whether it is in terms of new business growth, whether it's in terms of group growth, or whether it's in terms of number of policies or even protection. We have done well versus sector. However, it is lower than the typical run rate. However, we are carrying the costs of a full-fledged run rate of typically maybe 17-18%. So against that, we are trending as of now at, like I've guided, somewhere around mid-teens. So naturally, there will be pressure on margins only because of the removal of taxation. But if you take a slightly longer term view over the next year or so, once this year is out of the way, the upward trajectory on margins will continue to happen.
Okay, let's welcome on board Kush Bora as well. Kush, thank you so much for waiting by patiently. Wanted your take regarding a couple of these buzzers in the trading session today. Metropolis is doing quite well. You have RBL Bank and a couple of these other financial names like PFC, etc., which are also perking up. Anything that you like from this financials NBFC space?
In fact, incidentally, both these spaces that you've mentioned are seen the kind of recovery that's happened in the entire pharma space, especially the diagnostics. And these are coming out of a long slump, so you could expect this move to continue. So Metropolis again, if from here also does warrant a fresh buy for those kind of positions, for fresh positions. The target would be 1540 and 1575. A stop loss at 1475 is something that I would place. As far as RBL Bank goes, very similar story actually. If you see this bank had underperformed its peers by quite a lot. This is also reviving now, so I wouldn't be surprised to see much higher levels on this. But from a trading perspective, 180 to about 186 is where this head in the near term. 170 is where I would place my stop loss. So both the spaces are doing well. And if I have to pick one, let's say from the NBFC space, I would have MFSL, Max Financial Services. This stock has seen a lot of momentum. Had gone sideways for the last couple of days, but is now reviving again, which is a very good sign. It's a sign of a strength in the stock. So here also someone can initiate a fresh position. 785, 800 would be your target. 750 is where I would place my stop loss.
Oh, got it. Kush, but other than that, from the HDFC group itself, would you want to take a position now in any of the names?
Well, HDFC Life is something that does look interesting. The move had already started in the entire insurance space just a while ago, and now with this news of the merger being cleared or coming through, we are seeing a very clear breakout. So 650 was a resistance zone for this stock. It's given a very clear breakout. The kind of volume action that we are seeing could push the stock further over the next days also. So this is one stock that I like, given the entire insurance push and the news with the group. So 675, 690, these are the levels that I'd play for, and 650 is where I would keep my stop loss.
Right. Amisha, while there's a lot of speculation on who's going to replace HDFC within the Nifty and the Sensex, and a lot of names being thrown around, but one such name is also LTI Mindtree, which gets me really to the question whether worst for IT is behind, and are you recommending nibbling into the IT sector at all?
So recently, my strategist has increased weights on IT. With a clear understanding that the prices are reflecting most of the slowdown in growth and earnings that street is expecting. So I would say that, stocks may not have a runaway rise, but compared to markets, where they are and the broader valuations across manufacturing, where the growth is higher and valuations are even higher, the combo of IT, where growth is slightly tapered off and valuations have tapered off quite a lot, we have increased our weight in the sector.
Okay, so that's the take coming in on IT. Worst priced in, at least that's what the street is betting on. But come just a couple of weeks, we'll get the numbers from the likes of TCS on July 12th. HCL Tech will report numbers, and then the slew of those earnings will start as well. Though not much is expected with respect to the Q1 earnings as such. But Amisha, in terms of the consumption theme and urban consumption specifically, that is not seeing any slowdown, right? Whether it's a QSR name, whether it is aviation, etc. That's one pocket which has been just going from strength to strength. What is your recommendation as to which is the best way to play it?
So we, this is not absolute consumption, but one industry within the urban spending, rather, that we like a lot is the hotel space. Because we think that the overall capacity has been pretty constant for last almost 5 to 6 years. And now we will see a trend whereby the occupancy rates are rising, room rates are rising, and of course the food revenue is rising. All three will lead to huge amount of margin growth and reduction in debt. So we like this space as one of the best. Of course, within the other consumer stories, we like some of the building material stories a lot. We like stocks like KEA and Polycab also quite a lot. But there are different aspects to this, but not clearly we like, this QSR space at the top of our mind only because it has run up a bit. We think it will take a little breather before it starts. The long-term CAGR story starts to show some good value in it.
To reiterate, Prabhudas Lilladher, India strategy changes which happened in the report on 15 June. The major rating upgrades had come in on Apar Industries, Marico, Navneet Education. There was rating downgrade for Dr. Reddy's, Glenmark, Volta, City Union Bank, Awas Finances, etc. And estimate upgrades coming in for a lot of auto companies like Ashok Leyland, Tata Motors, etc. Just wanted to get a sense from you, Amisha, about the ratings downgrade on Dr. Reddy's, Glenmark, etc. Are you not excited about the pharma story which everybody is talking about now?
See, the composition of each pharma company is pretty different, both in terms of their US and India or US and non-US business, also in terms of their US presence into which segments that they are. So I know that some of the stocks like Oro are doing very well because for almost 8 quarters or maybe more, then margins were continuously under threshing. And while that was happening, they were continuously investing into interesting businesses in injectables as well as in Europe. So now that the margins have stabilized in US business and are likely to grow up, some of the other businesses are also valuable. So as a combination, yes, we also like this story. And the stock is doing really well. But as a broad sector, we are not as bullish. We still like compared to pharma hospitals, just to add to it.
I'm a bit surprised there because if I look at your high conviction picks, you have removed Apollo Hospitals as well as Max Healthcare from your high conviction list and added a couple of other names like Maruti, Siemens. And are you still very bullish on the hospital names?
Yes. As a broader theme compared to pharma, we feel that hospitals are a much better space still, both because of rising occupancy as well as addition in rooms. Compared to why we reduced that from high conviction is because the stocks really ran up quite a lot in last 2 months. So we thought that it is not at this price, the high conviction pick, but they continue to remain as our overweight sector. And you asked second question was on Maruti and Siemens. Yeah, we think that these continue to come as our high conviction pick, each for a different reason. Siemens, of course, because of the kind of threshing it took recently, and we feel that now it has come to a interesting level. And Maruti, because of the kind of product introductions that it has, we think that it will start doing really well.
That it sure has. Amisha, great to have you on the show. Kush as well as Naresh, let you guys go also on that note. Good to speak with you as always. Let's begin winding up for the day, and we're pretty much closing at the high point of the day, 18,800 back for the Nifty futures. 18,800 is the level that we're closing in for the spot as well. HDFC Life, Apollo Hospitals, JSW Steel, SBI, SBI Life, Bharti, HDFC Bank. They are the ones which have actually done the heavy lifting for the index today. Still under pressure for Tata Consumer, for Reliance, for IDC, M&M, Maruti. They've not done a whole lot, along with, of course, Britannia as well. Broader market was lively with names like L&T Finance, Metropolis, Canfin Homes, RBL Bank, and then AB Capital, which was the top winner today. Well, that's pretty much it on this edition of Closing Trades. We'll catch you again with all the market action tomorrow morning at 8 a.m.